Well, hello everyone. Welcome to Trading a Smaller Account. Today, as I was preparing for this class, and we meet on Mondays and Fridays for Trading a Smaller Account. And then on Wednesdays, I teach trading price patterns, which I treat as a companion to this class. So as I was preparing, I noticed that a lot of our trades have hit targets. And the ones that are still in our account, many of them, some are doing okay, some are kind of like take your breath away in the red. And so I thought what we talk about today is if you have a vertical and it's in the money, it's at risk of assignment if you're in a live account. And sometimes the temptation is to take your laptop and just close it and go for a walk or go for lunch with a friend, or I don't know, throw your dog a ball and just do that head in the sand thing and hope it will look better the next day. But choosing to make no decision is in fact a decision. And so we're not going to do that. We are going to do the tough thing. We are going to look at those red trades square in the eye, and we're going to make some informed decisions. And some of that decision may be just the decision to take a deep breath and wait. And with some of it, it may be, it's time to wave goodbye, admit that that trade didn't go the way we wanted, and exit. With some of them, it may be that the trade did go the way we wanted, but the winds of change may be upon it. And do we want to take the money and run? And so that's what we're going to talk about today. So we've got a lot to discuss. We've got several new trades to place. I also get asked a lot, how do you choose the examples you choose? So we're going to look at a few of the ones that I looked at and considered, and then for one reason or another, maybe they didn't meet our example trading plan criteria, and we said, looks good, but, no cigar. So we're not going to place a trade. So we're going to look at some of the ones, that kind of we looked at and then said, yeah, no, thank you. Okay, so, and we've got 45 minutes to do all this in. So, yeah. Somebody's saying, quoting Rush, a Canadian rock band, if you choose not to decide, you've still made a choice. Yeah, exactly. Anyway, if you are not following me on X, consider this your formal invitation. I posted something that I have to remind myself of every once in a while this morning. So my handle at Barb Armstrong CS. Connie Hill is with me in the chat. She's a friend and a fellow coach, and posts a lot of great stuff. I love her early morning movers script and that she runs, and search that she runs, and she'll often share that with us on X. So you'll want to follow Connie Hill CS. Okay. And just before we get into the thick of things, know that options carry a high level of risk and aren't suitable for all investors. You have to meet certain requirements to trade options with Schwab. Not all will qualify. We're going to look at the paper money software application. That is where we, that is where we place all our paper trades in this, all our example trades. And it is a brilliant place to learn and figure things out. Make sure you understand your trading strategies before you consider trading in a live account. But short options will not be assigned early in paper money, and that can happen in a live account. Okay. If you have never been to an in-person event, I love these events. And I will be at the Dallas and Chicago market drives. So if you're in the Dallas area, come and join the crowd. I think we're expecting somewhere between 750 and 1,200 people to attend this event. So you'll be linking arms with lots of people. We're flying people in from all over the country for this thing. So some of the guys will be there from Chicago and Colorado and from California and from, Ben and I believe Kevin will be in Dallas next week, Kevin Horner. So come and join us. So these market drives go from what's happening globally in the markets to all the way down to individual stocks. And we'll talk tariffs, we'll talk interest rates, we'll talk the Fed, that we talk about all of it. And come hungry, we'll have the coffee on, we'll have breakfast ready, we'll pick up the tab for your parking, and we'll have a nice reception at the end of the day. We'll have lunch. So these are really great events, and I hope you can join us. If you are new to this class, we do a very short market overview because this morning, Mr. James Boyd filling in, running solo without Kevin today because Kevin's in DC doing a 2-day event with Ben. We'll do a very quick market overview. If you want a more thorough overview, you can go to the archives and look at the one that Brent Moores did yesterday. There's one at the market open each day called Trader Talks. We're going to place some new example trades, and then we're going to do a bit of trade management. Israel is asking if we can do a bull call a spread today. Yes, your wish is my command. I will do such a thing today. And if you're new, actually this year we started with 25,000. Our max position size is 5,000, and our max risk per trade is 500. And our focus in this class tends to be on that short to intermediate term time frame. Okay. And we're doing both bullish and bearish trades. And most, a lot of our trades involve options. Okay. So, and I tend to move pretty quickly in this class. This is an intermediate level class. Okay. So we're going to start with the SPX. And so, it hit a new all-time high today. So pretty hard to characterize this trend as anything other than bullish, right? How about the NASDAQ? It's hitting a new all-time high today. Again, bullish. How about the Russell? Well, this hit a year-to-date high, and it's not an all-time high, but it's within striking distance of it. If we come back 5 years, it's pretty close. It's within 66 points of it. And then how about the Dow? If we come back to our year to date, a new all-time high yesterday. And how about the VIX? Pretty low, at the low end of the range. I mean, the year-to-date low is 1412, and we're at 1456. So that shows a lot of confidence in the market. And by the way, I just want to not only welcome everyone that's here, and if you're brand new, feel free to type a greeting into the chat so we can welcome you to this community. But to Posh and Will and Riceberg and Rick and CEO and Israel and Debbie and Dom and John and BJ and Kevin and TM and the rest of the gang, thank you all for being so participatory in the chat. It really helps bring this class to life. And if you've got questions, don't hesitate to ask. And between Connie and I, hopefully we will have answers for you. So we're going to go back and forth between looking at trades already in the account. And on Wednesday, we covered a few that had hit targets. But when we come and look at, we'll start by looking at the top of the order and then the bottom. So we did a trade on Baker Hughes where we did a buy right covered call with the goal of being called out. And when I looked at this first thing this morning, it was at 47.01 and we sold the 47 call. So what's the most we can make on this trade is to get called out at $47. And even though it's within 13 cents of this $47 strike, right now, if we cashed it out, we'd be up $134, which is a base hit for us. But, we'd be leaving $172 on the table. And so maybe on Baker, we just wait, and we're just being patient. And, this candle pattern is indicating that maybe this current uptrend may be coming to a close. We had done a long call on this also, which hit our target. And so we'll eventually compare these two trades. But, if this does pull back, what might we do? Well, we might buy back the call if it loses some of its value and then sell another one if and when it comes back up. We might roll it. Or, if it goes through our strike, we might just allow ourselves to be called out. When we placed the trade, we agreed with ourselves that if we were called out, we would be happy with the return that we got. Okay, so for now, we're going to wait. Now, we also, in Wednesday's trading price patterns, and if you didn't watch that, you can go back to the archives. I'm sure you've all subscribed to the channel. If not, hit the button in the bottom right corner. It's free to subscribe. But we're up 16% on this trade that we placed, and I believe it was on Wednesday. Yeah, on the 10th, and today is the 12th. And so, but we've lost half our profit on this. And we had bought a long put with a target. And here's our target at 43.77. And what I was going to do was an example of how to adjust, because this was a 1 ATR target, how to adjust the stop. But given that it may have found a base and be turning, I'm going to put a question into the chat, because maybe what we do is take the money and run, and then if it turns and starts to go down again, TTD, take the money. Q Steve Miller. But I like to run a semi-democratic class. So here was our target here. And we have two choices. We can either say, let's take the bit of profit that we still have, or we can adjust the stop. And the original stop was 1 ATR above this candle. So we'd be snugging the stop up to 20 cents above this candle, so that if it then goes up again on Monday, we're out. There's no rolling it. We're not going to roll this. With this 1 ATR trade, it's a very disciplined approach. We either move our stop up. In this case, it would be we'd move our stop up to 46.35. Or if we think this might be bouncing, we could just exit the position. Okay. So 91% are saying take the money. So we are going to take the money. Now, I get asked often how, if we were to update, so I'm going to organize these by symbol. And if the answer had been just adjust the stop, we would have come down here to replace and cancel the order, and we would have come to this sprocket, which brings up our target and our exit, and we would have moved this stop from 54.42. We would have moved it to 46.35. Okay, but we're not going to do that. So what we are going to do is just delete this whole order. Why are we doing that? Because we no longer want to have an exit in place. We are going to choose to just exit the position. So this should be going away. TTD. We're just going to cancel that order. And then we are going to come down to TTD, and a 15% gain in 2 days is not too shabby, but yesterday we were up 30-some%. And so what the market giveth, this is just as, shows us that what the market giveth, the market can taketh away. And it's in the process of take a thing awayeth, so we're going to say, yeah, we'd like to take our little bit of profit and call it a day. Okay, so we've looked at TTD and we've looked at Baker. Let's go and look at some new opportunities, okay? So first one up, and let's look at the bullish side of the street, AVGO. Oh, wouldn't you know it? So AVGO, when I looked at it earlier, and this is a live candle, so when I looked at it earlier, it was a red candle. And the point I was going to make is that this looks a bit like a bull flag, doesn't it? And we're in the green here by $1. Let me just bring up my drawing tool. Come to mama. Oh, there we go. And, it was starting to pull back, but we didn't have that close above the high of the low day. Oh, my drawing tool is going to be funky on me today. Close above the high of the low day. Let's see how long that takes to show up. Okay. It's being funky. So we'll just have to use it. Yeah, somebody's saying, 15% for 2 days on that other trade, not too shabby. But so what we have here now is an inside day, but this is a live candle. So it could change, and end up being, a really bullish candle, or it could end up changing and being a really bearish candle by the end of the day. Like, who knows? But right now, what we have is a harami where today's candle is inside the body of yesterday's candle. And then your question is, well, it hit a new high yesterday. So is this, at resistance or at support? And this is where this whole art of technical analysis comes in, because somebody who is bullish on this stock might say, well, I see that it came up, but it's come back to this previous high, which it hit 2 days, this old resistance level perhaps acting as new support. So if we wanted to be modestly bullish, could we come and do a short put vertical on AVGO at maybe 350? We don't have earnings coming up. And then let's just make sure we do not have a position already. And we don't. So let's come out. And if we look at October 10th, we're coming out 28 days. If we're coming out 3 weeks, we still have lots of volume and a tight bid-ask spread. Lots of volume, tight bid-ask spread. It's already traded 11 million shares today, and this is almost a $400 stock. And where did we want to be? We wanted to be below 355. And you might say, like, hey, I'd feel better if we could be below 335. So 335, you're going to have a way higher probability of success, but you're going to get less premium, if you're $20 lower. So let's just see at 355, if we're we're only coming out 3 weeks here, we get $1.92. And that's a pretty high premium. So we're looking, for at least a 21 to a 25% premium. We are going to switch this gadget to a calculator. And we're, so what kind of return on risk on this? Well, we have the potential to make $1.92. We're risking $5 minus $1.92. So that's $3.05. That's a 62% return on our risk. That's pretty high. So we might say, well, that's great, let's do it. Or maybe do we come down below this candle and go to 350 and say, maybe we don't need quite that much premium. Maybe we could be happy with this 350 and sell that instead. And we're still getting $1.65 divided by 335. That's got to be 50%. 49.2. So if we say, okay, and if I draw this on the chart, if we leave it there, are we okay with that? And if we say we're okay, then we place the trade. If not, what I would do when I was trying to figure this stuff out is, if the instructor was placing a trade or the coach was placing a trade and I wouldn't have placed that trade, I would put that in the comment section. I would say, I'm putting this on in my paper money account so I can follow along, but I don't think I would have placed that trade. But if you look at that and think, hey, the market is hitting an all-time high, this AVGO is part of the tech sector. If we come down and we look at like all the markets are hitting highs, how's the tech sector doing? So if we load the tech sector, sector hit an all-time high today. If we come to the live news on AVGO, say, well, what does everybody else think about this stock, as in the analysts? Okay, Mizuho raising the price target to 410 from 355. That's a fairly big jump. Jefferies to 415 from 350. DBS to 390 from 330. So it seems like they're, you know, all of this happening today. So that would seem to, you know, to indicate confidence. And it doesn't mean they're right. Analysts are wrong frequently, as am I, you know, but we're going to go ahead and put that one in. Our trading plan, our example trading plan suggests that, you know, we want to get out when we've got 80% of our max gain. So we're going to make this a first trigger sequence. We're going to come in and right click and come to create opposite order, and we're going to make this 32 cents. Now on Monday, if we look at this, let's say AVGO gapped up and we had 50% of our gain, you know, basically over the weekend. Might we take it? Sure. This doesn't mean we have to wait this long. Troy is saying that he's tuning in from the workshop in DC, so it must be lunchtime. You know, it's 12:30. So hi, Troy, and hello to everybody out there in DC. It's great to have you on board if you're, you know, using some of your lunch break, but I hope you get to meet some other fellow traders. And, you know, I love those events. I'm kind of sad that I'm not there with you, to be honest, but there we go. Okay, so we're putting this in our short put vertical bucket. There we go. And why are we only doing one of these? Well, because we're risking $350. Well, 343. So to do two contracts would be almost 700. That's just blowing past, you know, what we agreed we would limit our things to. Okay, how about we look at Apple? Now, I don't know. Yes, I'm coming to Dallas, definitely. Can't wait. 2 weeks from today, I will be on a plane, on a jet plane. Now, I don't know how many of you are fans of Apple, but, you know, this is one of the largest companies in the world. And, you know, up 1.73% today. We have, you know, it's been uptrending, you know, as with many other stocks since April, the beginning of April. And then it came back and some might say, ooh, is it setting up a head and shoulders? It could be. You know, the analysts were pretty tough on, you know, what they announced product-wise this week. But as far as I can recall, they're always kind of tough on what they announce in September. The expectations are so very high for this company, you know, but we're bouncing off the support level around 225. So could we sell a short put vertical, or could we do, you know, a long call vertical? We could. So, you know, and we could do one of each and compare them. So if we look at this, and if we're just coming out 21 days, we've, you know, this is such a heavily traded stock, 27 million contracts. We're still early in the day. Could we get enough premium? Because, you know, we've got almost $10 worth of wiggle room. The answer is no. We want to get, you know, at least a buck, and we're not getting it. So could we come out to the 10th? That'll give us 87. So really a short put vertical, if you want to be around this 225 mark, we just can't get enough premium. Had we placed the trade yesterday, we would have been great, but we didn't. And so sometimes you might say, well, I'd like to do this. And first thing this morning, we might have got a little more premium. If we came out to October 17th, maybe. Now, when I looked at that first thing this morning, that number was $1.17. Now it's 99. And so October 17th, that's over 30 days away. So we can no longer get enough premium for it to meet our entry requirements. So short put vertical is not a possibility if we're following our rules. Okay. So, but what if we did a long call vertical? Well, and we kind of bracket and we do, the 230, 235. And we've got a 10-cent bid-ask spread, tons of volume. And open interest is how many contracts were on the books when the market opened. Volume is how many contracts traded today. So thousands of contracts. So if we come to buy a vertical, if we're at 293 and we want to make 50%, it would have to be up about 450. And we're almost at 234. So it only has to go up $1 for us to potentially be at our max gain. So could we do that? And the answer is, well, you can do whatever you want. But with this, you might want to watch because so 293 times 1.5, that's 440. Oh, well, now it's 290. 290 times 1.5, 435. Okay. So we want to exit when we've got 435. How many are we going to do? One, because we really don't want to risk $600. So we're going to make this 435. And so whoever asked us to do a long call vertical, here you go. So there's our long call vertical. Now, there's another one that the analysts have been stumbling over themselves to sing their praises, and that's Electronic Arts. And this one is up 16% year to date. Not too shabby given that, the NASDAQ is up 13%. So it's kind of matching the NASDAQ and maybe slightly ahead of the S&P. But, so we look at this, it kind of had this pullback. And then depending on how you like to draw your lines, and this is where the art of technical analysis comes in, we had a bit of a breakout, 1 day pullback, and it's bouncing, or you might say, it came down to the 30-day moving average and is, moving to the upside. And so, could we do a short put vertical around the 165? Maybe we won't get enough premium, hard to tell. Earnings is the 28th. So we want to, whatever we do, we want to be out before the 28th. And if you want to look at, here's Electronic Arts, what are the analysts saying? Well, they're saying they've moved their target. Benchmark has moved their target from 180 to 200. Wedbush has a target of 210. That's above the top of where our chart currently goes. Davidson 160. So look at this. These guys, this is what they do for a living. One says 160. They raised it from 150. Arete upgrades to 192 from 184. Citigroup at 173. So we've got 160, we've got 173, 192, and 210, and 200. Who's right? Who knows? But one thing we do know is that they're all raising their targets, which tends to be pretty bullish. Now, this started in August, and yet, the stock came down. So sometimes, it's hard to figure how the market reacts, but we've had this kind of pennant pattern that's set up. Like if we come from here, and we talked about pennant patterns and getting started with technical analysis, I think it was 2 weeks ago. So if you're new to pennant patterns and consolidating patterns, you might want to go check that out. But if we were bullish on this, could we could we buy a call? So what could we do? If we're bullish, we could buy a call and put in a target of 180. Or we could buy some shares of stock and put in a target of 180. We've got 28,000 of our 31,000 sitting in cash. So could we buy $5,000 worth of stock and put in a target of 180? Well, why don't we do that? Now, where might we put a stop in? We might say, well, here I see support here. Here's our recent low at 164. So I'm going to put a stop in 164, 3% below that. So that's 159. This is electronic art. So stop at 159. Now, others might say, like, are you new? Like, how about we use this diagonal resistance line? And we could use that too. Like, that's up at like 167 instead of going below 164. So if we did that 167.11 times 0.97, our stop would then be at 162, so $3 higher. And so you might want to use that as your stop instead. Like, and if it gets to 162, it's below this number. It's below this low. So, it's not going in the right direction. And then our target up here, like if we made our target 180, is this making sense to everybody? Yeah, it's interesting. Like, and this is not unusual in this class for most of our money to be in cash. We had a position in Celsius Holdings that we'd had for a while and it just hit our stops. Maybe we should look at Celsius. I haven't looked at that one today. You can't look at everything every day. We only have 45 minutes. It's just not a lot of time, is it? But we're going to come to our calculator. We are going to take our 5,000, which is our max position size. We're going to divide it by, I'm going to just make it 171 to make it easier for me on the calculator. So we can buy 30 shares. So if we buy 30 shares, we're going to come to our trade tab and we are going to come up here, buy custom with an OCO bracket. And the first thing I'm going to do is adjust the quantity so I don't mess that up. I'm going to make it 30. And then we're going to put in our target of 180. And our stop is going to be 162.09. 162.09. And we're going to make both of these good till canceled. So this is a stock with a target. And then we're going to do a long call. And we're going to compare them. Now, what's the advantage of buying the stock? Well, if it lollygags about, so we're risking $877. Well, sorry, $8.77 a share times 30. So if I round to 9, make that $9 a share, 30 times 9 is 270. Is that less than 500? Yes. So even if it were to gap down and we were to get stopped out at a lower price, it wouldn't likely blow our, our budget, because we don't want to risk more than 500. And then, how much might we make? About 270, 300. But for us, I don't know if you call that a base hit, maybe a double. We're going to compare it to a long call. Now, what's the advantage of the long call? Well, the long call is going to cost us less because we're investing $5,125 here. So we're going to be spending way less, but it's going to come with a deadline. Yeah. So the stop, I don't know if it's 5% below the buy, it's 3% below the diagonal support line, what we're expecting to act as support. Okay. And then if we come out, do we want to come out to October 3rd? No, we want to give this time. So if we look at this and we think, hey, it took a couple of weeks. How long did it take to come down? So let's just change my drawing tool. This is just an easy way. It took a couple of weeks, took 19 trading days, took almost a month. So it might take a month to come back up. So we want to be able to be out 20 days ahead of time. So maybe we don't want to look at October. Maybe we even want to come out to November. And so this makes the options more expensive. And we can't afford the at the money option because we could lose the whole thing. We're going to put a stop in at 50%, but we're going to do this 180. And so even though we're paying more, the expectation is that there will be more time value in it. So we are going to come to buy custom with an OCO bracket. So we're buying this. How much could we lose? We could lose all of it. We're going to make this a market order to get out when, or I always like to use a preemptive close is what I call it. I'm always like aiming for the positive. If and when, it might never get back up to 180, but we're placing these trades with the expectation that it could. So if it gets back up to 180, we want to exit this trade, or if this loses half its value. So if it gets to the point where it's only worth 255, it's either lollygagging about and going sideways, or it's not moving in the direction we want it to move quick enough. So Sia is saying, like, why not buy a protective put? Well, with Electronic Arts, we only bought 30 shares. Buying a put would protect us for 100 shares worth. But, you can't buy a protective put for 30 shares for most stocks, unfortunately. So that's why we didn't discuss that. Okay, so we're going to compare this to the stock with a target. Okay. Now, what else could we have done? Could we have done a long call vertical? Yeah. Could we have done a short put vertical? Maybe. There's lots of different bullish strategies out there. And sometimes, like, we're able to do a long call because the price of the options are such that that's a possibility. Like, if we look at Tesla and we come to the trade tab, and if you're saying, well, I'd like to do a long call, well, you might want to do a long call, but it's not in our snap bracket. There's lots of volume on the stock. There's lots of volume on the options, but doing a long call, $2,600. Like, that's all. See your max loss position size and raise you times 500% and then some. So if we were bullish on this stock, and it's now up $23 today, having a really good day, but this is when a long call vertical to take advantage of the trend, is an opportunity where, doing a long call is not. They'd have to go so far out of the money. So what about Starbucks? So, there are other stocks, and we just exited a bearish trade that we had put on. And when would the entry have been? So we had this big consolidation pattern. It broke to the downside and then it came up. The entry would have been on this day or even this day. Now we've kind of missed the boat. We've just kind of missed the boat on this one. But, is it downtrending? It is. And this is where sometimes we look at things and we think, well, if the market is hitting all-time highs, and we looked at counter trend trades on Wednesday in that the market may be going up, but there are some stocks, and I think one of the trades we did was Lulu, where it has been marching to its own drummer. And it may say, well, the market may be up, but this stock is down 60% and is continuing to decline. And so here's another, trade that we did that was bearish in nature, and it's counter to the trend of the market, but it is congruent with what's happening with this particular stock. And so as long as it stays below 170, we're good to go. And we placed that trade on Wednesday also. And that was our short call vertical. And we're up 30% on that. So if that were to fall again on Monday, could we say if we're up 50%, you know what, if we got 50% in under a week, maybe we take the money. So we are now, hard to believe we're running out of time. Our 45 minutes, it goes awfully fast, doesn't it? But, before I wrap, I just want to say, if you haven't subscribed to the Trader Talks channel, I want to bring that channel up because especially if you're new, and I think we do have some new people on board today, if you come to the Trader Talks from Schwab coaching, one of the resources I've created, let me just fill the screen here. So when you first get here, what will come up is whatever's currently being taught. And then if you come to playlists, if you scroll down, so here's trading price patterns. If you missed Wednesday's class and want to go back and catch it, we looked at, trading downtrending, looking at downtrending opportunities. And then I created something called Trade Management Mini Sessions. And I put them into 4 different groups. So the first group is these mini sessions on candlestick patterns. So, like their little snack size, each one is a different pattern. So look for more to come on that. If you haven't watched this Power of Compounding, I encourage you to watch that and the follow-on to it. But here's a bunch of example trading plans. So here's a long call with a 1 ATR target. We had just done a long put. Here's an example trading plan for short call verticals and one for long call verticals, which we talked about both of those today. And we also talked about short put verticals today. So it gives you access to all of these. And then you can use these example trading plans, as a kind of a template that you can use to create your own trading plan. All right. And then if you're new to Thinkorswim, there's a bunch of, short videos on, how to customize your watch list or your chart or the monitor tab, all that kind of stuff. Okay. Yeah, we have some trades that are not doing great today, and Amazon is one of them. But you know what? Let's look at Amazon because we had a bullish trade on Amazon. Has that broken below our support level? We have until October 3rd. We placed that trade on Monday. And it hasn't. So on Monday, we'll come and we'll look at these long vertical trades and the short vertical trades that are underwater as well. We also had trades on Boeing, where we're expecting it to be above 230. And it seems to have hit a support level. So on Monday, we may close those out as well. Okay. And you want to look at the things that are not going well and then make an informed decision on what you're going to do as opposed to sticking your head in the sand. And sticking your head in the sand, the whole ostrich approach, it is an approach. It just may not serve you as well in the long run, right? Right. So if you would please subscribe to the channel, hit like. By doing that, it's a chance for you to do a favor for a random stranger without leaving your house, which I think is a nice thing to do. It also helps us because it moves it up in the YouTube algorithm so more people can find and access this content. And then don't forget to follow Connie Hill and I in the land of X, Connie Hill CS and Barb Armstrong CS. So guys, have a really awesome weekend. Lots of great content still to come. So stick around and get out there and hug someone you love. Stay safe, and I will see you on Monday. Bye for now.